is August 4th, and this is, of course, the video log that takes 30,000 to a million. And today, after I take you through the account real quick, I'm going to answer the question whether the markets are overvalued right now or not. I was asked to state my opinion over here to tell you whether I think the markets are overvalued. And of course, my immediate question back would be, which markets? You see why I asked that in a little bit. But first, let me take you through the account. Now, this is going to be a mind-blowing figure. 2,000 of these dollars are not gains. I put them in as a, kind of like a congratulatory deed for breaking well over $100,000. I'm really happy about that. So I added another $2,000. But Xnate that $2,000, this is the number. 109,116. So now we're talking some serious figures, okay? This account has more than tripled. Granted, I've added, money throughout the years here, the year and a half or so that I've had this account running. But this is still a really big accomplishment in my eyes. Like, I know, not a lot of you, but some of you, select few, and sometimes I look through videos on YouTube and stuff like that. There's certain individuals that have put their money into like Tesla, Nvidia, and Apple or Amazon or something, and now their accounts are up 300%. But risk adjusted, I think I'm doing pretty good. Now, let me show you how much money I've actually added. Okay, I'm gonna do a quick account review. So this is the monthly chart, 3-month chart, 45% in the last 3 months. That's pretty good. The 1-year chart's 53% year over year, which is really nice. It just happened to be in a little dip here, that's why, last August. And then this is the all-time chart. This is what it looks like. Now, of course, I didn't really have any money in this account back here for the first few years. It was just cruising. And then I started taking this account seriously somewhere around August. I think it was my first video here was like August 28th or something like that. So somewhere around here. So basically, the total money that have been added into this account is about $65,000. Okay, so I started with 30, and I've over the year and a half or so, I've added another 35,000. Okay, so now I'm sitting at 109. All right, that's up 67%. Okay, so you take that 65,000 and add 43,800 or something like that, and you get a figure that's roughly equal to 109. So that's the story of the account so far. It's been a pretty crazy journey. This is probably where my first big move was here in December 2018 when I caught a knife really successfully, and I rode it all the way up to February, March this year really well. And then what happened was I tried to catch the knife again, and it didn't go so well. And so the bounce back has pretty much been the remnants of me catching that knife, right? So I bled out a little bit, but I survived, and now I'm stronger for it. Okay, kind of like if what doesn't kill you makes you stronger. That's the motto for this account right now, okay? Now, catching a knife is just one of the strategies I do. If you want to know more about what I do on the account, check out some other videos that I've done for it. I don't want to focus on it too much, but I think this chart is pretty entertaining to look at. It might be the story of a lot of people, but certainly my story here. I'm gonna go quickly through the positions. These are just options. I counted my options. There are about 60 of them. That's quite a bit. So I have 60 options contracts that are open right now. Only one of them is a buy, which is Apple, and it's contributing towards the bulk of my options gains this year. So if I click on it, you'll see what kind of craziness we're talking about here. I mean, I'm talking absolutely crazy. $11,380 return so far this since the contract's been open, up 373%. The delta on this thing is 0.8993 to be precise. 0.9 delta. So what that means is that for every 100 shares, I'm sorry, for every $100 that Apple moves, this option will move. Well, 100 shares of Apple move. This option will move $90, right? So 90% of the movement on the upside or the downside of the underlying asset, which is the Apple share. All right, so I'm gonna quickly go through them. So this is, oh my gosh, it switched again. I really don't like this. Okay, so these are all the contracts. You can pause at any time, as always, on the video and just check out the symbol. This is the strike price here. Then I have the whether it's call or a put, the expiration date, how many contracts there are, and whether it's a sell or a put. So here you'll see that all of them are sells, except there's 10 sells on UUUU, except the Apple buy right here. Now here are the current positions. Apple was contributing to $782 plus the option, which is about $1,000. And yesterday was actually, not yesterday, Friday was actually a huge move. I mean, Apple alone contributed to about $7,000 of gains on this account. So that's like 7% of the account up in a single day. People dream about these kinds of returns for a year, for a year's worth of investing, and Apple managed to do it in a single day. It's crazy. This company is nuts. Speaking of Apple, it's entering some kind of parabolic move, so I'm expecting some kind of correction at some point. But let me go through the account real quick just so you can see the figures, and then I'll move on. You can see the share price, the symbol here. I'm sorry, you can't see the share price, but you see the symbol and the number of shares, and from there you should be able to deduct all relevant information that you may need. By the way, while I'm scrolling through this account, none of this is financial advice, and of course, you could lose principal, you could lose all your money in the market. It's a very risky endeavor, so don't do it unless you are playing with money that you know you can lose. Also, if you're confused at any point or not sure or not educated, consult a financial advisor, especially when dealing with larger amounts of money. Alright, with that out of the way, I'm going to go into my little topic. Oh, if you want to see the account tab, this is the account tab. It doesn't give you too much information, but it's cool to look at. The reason I say that is because, of course, it says I have $12,000 in cash, but a lot of that is sitting in collateral plus more. So, plus I have some margin that sits in collateral as well. So, but you can get a general idea of how heavy the positions are here. You can see a huge account, huge portion of my account is now Apple because I have 75 shares, and they've just been growing. They used to be, a smaller part of the account, maybe like 15%. Now it looks like they're about 35% or something. And then of course I have Cameco, 1,200 shares here, and then which is the position that I'm trying to build up. I want this to be as large as the Apple position. I want a lot of realty income into my account. And then I have UUU, DEM, SBRA, Visa. Okay. Now, let's go into my opinion of what's going on with these markets. And I have a little bit of a heat map that I like to look at when I'm trying to get an idea of what's going on with the markets. And my question back was, well, which markets are we talking about, right? Because as I've discussed before, there's been an acceleration in the bifurcation there, where the market's taken two or more like different paths. And on one side we have things like tech and precious metals, right, and biotech and whatnot, and large retailers, and on the other side we have the legacy retailers. We have insurance companies, financials of all kinds, energy like gas and oil, and everything else is just going totally the opposite direction. So it's kind of like we saw the fork, right? So here's the map that I'm talking about, and we're going to be looking at a daily heat map. Okay, I use FinViz for this. It's one of my favorite maps to look at here. And so this is just for today, right? But what I'm gonna do here, and you've kind of have it zoomed, you have a zoomed in view, so it's not really my entire screen there you're looking at, but this is better. This is the 1 day performance. But to get a better idea of what's going on in the markets, I like to extend the date back to see how things have performed over the last 3, 4, 5, 6 months, etc. So this is the 1 week performance. Okay, you can see here that, oops, excuse me. Apple's doing great, of course. Microsoft over the last week, Amazon, Alibaba, Facebook. Berkshire actually got a little bit of a pop. But you can see how during the last week, energy has been doing poorly. You know, basic materials, kind of mixed bag. Other industrials, not too good. Down here, this is the energy. And then keep in mind where these things are, because I'll refer back to them. This is the consumer up here in the top right. Can't really see it. But and this is the semiconductors, etc. The things that you most need to pay attention to is things that I'll highlight, which is the financials in the lower left corner. You can see a little bit of it here. JP Morgan, Wells Fargo, HSBC, and then we have you know, Westpac, Bank of America, ING, etc. And now I'm going to pull it out. It's still a mixed bag. You can see how it's very scattered, but it is going to start grouping up. Okay, if we pull out 3 months, everything seems to be getting caught by the recovery, right? I mean, there's a lot except maybe energy and healthcare has been kind of flat, and some of the financials like Wells Fargo, HSBC, maybe Intel here. But for the most part, everything's up. But now, if we pull out the 6 month right before the virus attack here, you'll see that there's very clear bifurcation, right? You can see how the tech is really pulled ahead, especially the big players. Apple, Microsoft, you know, SAP, Adobe, you know, Taiwan Semiconductor. So a lot of the semiconductors like Nvidia, AMD, huge gains, right? Nvidia's up 83%, Apple 41, Amazon 55, Alibaba 21%. So tech, big retailers, okay, especially Chinese retailers for the last 6 months. And then we have, like, you know, Facebook is kind of like a tech company, Netflix, whatever, communications. And then it's going to be hard to see here, but on the lower left, you see banks regional, right? They're getting murdered. Let's see if I can do this. 1 second. There we go. I've disappeared. They're getting murdered. Regional banks. And banks in general, diversified. All right, that's Wells Fargo, JP Morgan, Bank of America, all of them just getting destroyed. I mean, HSBC down 40%. Look at this list. All right. Royal Bank of Canada, okay, down 12%. Everything's down super large. ING down 34%. Okay. Visa pretty flat, but PayPal is kind of the only standout here. Visa's holding out strong, and MasterCard too, because they're just good companies. But for the most part, even the credit services are going down except PayPal. It's kind of techy, right? Look at it, Citigroup down 32% from pre-virus times. Now, what else can we notice here? Energy on the lower right corner, right? Down 40%, down huge. Let's see if I can pull up some lists here. All right, so we have XOM. Look, it's down 30%. You can't really see it. Oh yeah. Well, I mean, I can see it. Let's see, what can I do to help? I don't want to move the screen, so you're gonna just have to trust me here. Okay. We have Chevron down 20%. Petro China down 20. Everything's down. Total SA. There isn't a single green in the energy sector here. And then we have oil and gas. One green that's like some little tiny company with small market valuations. All of them, You can see a lot of red here. Very, very few companies that are green. The green. Look at this. It's a bloodbath in our energy field. Basic materials are up, and gold, of course, is doing just fantastic. Precious metals in general doing very well. You can see all these companies here that are, the percentages are on the right, up to 60 to 100% gains. And then copper is doing okay, and there's the silver sector. Where is it? I'm trying to find it. Silver looks a lot like the gold sector. But this is the 6 month. But the one I like the most is the 1 year. Okay, year over year. Then you can clearly see what's going on. All right, it's very plain as day to see. Okay, the financials, bloodbath. Regional banks, bloodbath. Right? Microsoft, tech, doing great. Large tech, doing great. Semiconductors, doing great. Large retailers, online retailers, doing great. All right, Tesla, what the hell, right? And then, of course, we come down to the lower right and the lower left sections. Okay, oil and gas, tragic. Tragic. Everything's down 40% or so. Oil and gas, horrible. Energy, horrible. Gold, great. So basically, you can see on this map here that it's really a stock picker's kind of a market. It's not like you just buy the S&P 500 and think things are going to go up. It's really been a separation here. So a lot of the value stuff like financials and oil aren't really making a breakthrough. It's all about just growth, tech, and you know, um, online retail, etc. Now the question is that going to continue, or is it going to reverse at some point, right? Just like a rubber band, sometimes markets are known to revert back to their means. And I've had plenty of bets on tech and precious metals, but I'm slowly starting to actually shift towards the more financial and oil and energy kind of sectors that have been extremely beaten down. So I made the mistake of going into them a little bit too early, but now I think that they've been bouncing around the bottom of their valuations for quite some time. And I think that it's probably time to start buying a little bit, because one of the two things has to happen, right? Either value is going to catch up to the growth in tech a little bit, or growth in tech is going to come down to value. So I'm thinking that that's what's going to happen. So it's going to reverse a little bit, but I just don't know which is going to happen. And with the amount of money printing that's been going on, and the amount of checks that have been handed out, and the help for the corporate and the everyday person in the States, I'm thinking there's going to be a lot of dollars that are going to be going on into equities. And with the continued inflows and everything else over time, I think the market's definitely going to go up. But there is one risk factor that I believe is going to send even tech down for a short period of time, which is the U.S. elections. Thing around election time, there's a lot of political people in the States. Most investors, I think, are apolitical like me, but there are enough of them at the margin to make huge differences when it comes to political movements. So around the election, as polls come out and as the president, the candidates start campaigning around, I'm predicting there's going to be some volatility. On the down and upside, it's going to be a jigsaw for a little bit, and then if we're presented with some buying opportunities, I think I'd be wise to jump on them, and maybe even buy some more Apple at a high price, but not this high, right? If Apple corrects to somewhere in the mid 300s, I think I might pull the trigger and buy like 5 or 10 more shares or something like that. But those are my thoughts basically. I think the market's going to be going higher because of inflows and total amount of dollars, and the dollar is really the purchasing holds the most purchasing power out there, even though it's been going down against other currencies as of late. But when you have so many dollars slushing around, and U.S. is the third most populous country in the world, right? And you give everybody in that country $1,200, and now we're gonna give everybody in the country $1,200 more dollars. It seems like that's a lot of buying power, right? And we are the first to benefit. So the U.S. market is going to be the first to benefit from this money. We are the ones with the brokerage accounts. Another thing that I find interesting about America is that we have, as a percentage of the population, so many more investors, right? Everybody. I mean, I'm investing, I'm a nobody, right? And many of you are small investors as well. So we're so into it, right? If you go to a country like Brazil, for example, less than 1% of Brazilian people own any kind of equity. Less than 1%, any kind of, they have a brokerage account, excuse me. I think less than 1% have a brokerage account. I mean, I talked to my friend in Australia, and it's so hard to open up account there. You got to get verified with banks, and there's so many rules and regulations, and like, nobody owns stocks there. Nobody owns stocks in any other country. Like, it's just a small minority of people that either own a lot or just don't even bother opening up an account. Like retail, investors like us, it's not really a thing. Right? So if you give purchasing power to the people who actually are buying stocks, like Americans, I mean, that's going to really sway things. It's really going to pump things up, right? There's going to be a lot of money slushing into the markets. There might be some big corrections, but overall, I think that even the undervalued sectors like energy and financials are going to catch some kind of a bid next year, especially post-virus. Even leisure and hospitality, no, yeah, post-virus. Like as soon as some kind of vaccine comes out or people are able to move more freely, there's going to be so much pent-up demand, especially for flying and visiting other places, that I think the airlines are going to be overwhelmed. I think that the expectations are going to be high for the markets in those sectors, but I think they're going to be beat on the upside. People are going to want to go and travel way more than investors anticipate. So that's going to set us up for another big boom in 2021. Now, whether or not this big boom is going to be denominated in dollars that are worth a lot is yet to be seen. Okay, the real value of the stock market may not actually go up that much. And what I'm saying in a lot of words here is that I'm predicting some inflation happening in the years ahead. All right, I think I've talked enough. Hopefully, I've made my opinions clear enough to answer some of you guys that have requested my opinion on markets overall. And I also had a tax question and how much tax I pay. And for the account for last year, I gained about $30,000 realized gains, or like $24,000 realized gains or something, and my total tax bill from the account was about $4,000 or $5,000. So I paid that out of my own pocket. So you can, if you want, you can kind of deduct that from the account mentally, if you want to keep track of how much tax I'm paying. So that's that. Okay, I'm gonna cut it right here. I've talked a lot. I know I've been a little bit long-winded, but none of this is scripted. I just kind of go off the top of my head, and it's just kind of conversation, right, that we're having. So no cutting or anything or editing or anything like that. So, all right, I'll probably make another video on Thursday, and we'll see where the markets are at. Maybe Apple will correct, maybe it won't. Maybe the craziness will continue. We'll see. Catch you all on Thursday, all right? Peace out.